So you have a combination of the research team as well as our very own capital markets team. So from Monday, you're going to get a reminder of quickly what happened within just a minute or two from our very own Lena. And then Max is going to be moving on to some of the historical patterns that we analyzed, looking at the statistics and the data for the past 10 years, and trying to understand from the past drawdowns and corrections how the price of Bitcoin, Ether, and other assets actually recovered within the past 10 years, and how much time the investors actually had to wait to completely have a market recovery. And then last but not least, you're going to get more insights into the fundamentals for Tom. And then Alessandra is going to give you more color into the ETF markets, and as well as the underlying Bitcoin markets as well, traded across crypto exchanges and looking at the various metrics like volatility, correlation, and what have you. So without further ado, Lena, why don't we get started? Monday was quite a historical day, and the market seems to have recovered. It was not as bad as people may have expected, as you rightfully put here in front of the chart. Tesla, Meta, for example, had a larger drawdown than Bitcoin, as we can see in this specific time frame. So tell us more within a minute, what were the key elements that triggered this market correction, and then moving on to what we are expecting moving forward.
Absolutely. So yeah, just like you said, Tesla and Meta, I think one key thing that we need to remember is that this market correction or the market turbulence, I think, was brewing ever since the disappointing earnings reports. And then, of course, it was exacerbated by the Bank of Japan's high interest rate, the highest since 2007. And then on Friday, the U.S. jobs report also drove fears of recession, triggering sell-off of risk-on assets. And then these are only the macro. What happened in crypto? So what happened in crypto was the Jump Crypto, which is a trading arm of Jump Trading. And we know from on-chain data, and thanks to the transparency of blockchains, is that it has liquidated $300 million worth of ETH in the last 10 days. So from July 25th until August 3rd. And the silver lining here is, while the previous macro data has really impacted the global liquidity landscape negatively, this crypto-specific event didn't really undermine the global crypto liquidity. Now we've seen that the total market cap of stablecoins, for example, is at $163 billion. So we can see now how macro events trigger sell-offs and how crypto-specific events trigger. This is something a little bit new. Maybe in the later slides, we will dive deeper into how drawdowns or drawbacks affected crypto. Yeah, that is on a very high level what happened on August 5th. Please, if you haven't already, just go to our YouTube channel where we had a very timely webinar on the market turbulence on Monday. In the next slide, we can talk more about what has changed since. So we mentioned previously that one of the major factors that were triggering the sell-off were the geopolitical tensions in the Middle East. So what has happened? So yeah, to recap, on Monday, the U.S. Secretary of State Antony Blinken told the G7 that they should expect an Iran retaliation as early as Monday. So far, we haven't seen any news from that. However, we know that Hamas has elected a leader. Hezbollah is to launch attacks independently from Iran. And the U.S. is preparing for a war. They are deploying warships and jets. And the anticipation continues. So why is that really related to Bitcoin? On Monday, when that happened, Bitcoin sunk a little bit. And we've always seen that Bitcoin react to geopolitical conflicts or tensions or inflationary conditions or riots very differently. This time, it has actually matched gold. The gold also dipped a little bit on Monday. So we will see how the markets will react, how traders will react to this anticipated moment. On the contrary, or on the other side, we have positive news. So the US, we have two major news or major indicators that would help the Federal Reserve make up its mind over rate cuts. So, for example, the ISM came in a few days ago, indicating that the service sector is expanding, and that spurred some optimism that the economic situation will have a soft landing soon. Also, a few hours ago, the unemployment claims have also decreased. So that means that the unemployment rate will be a little lower. And they actually
and when you
exceeded.
mentioned the unemployment rates, it's from the U.S. jobs claims, which came a lot lower than the estimations. I believe it was 233,000 claims compared to
Exactly.
estimations being to 40,000 claims. So quite
Exactly.
positive, which means that probably not, but of course there are other factors to consider, but probably
Yeah.
not. U.S. is near a recession. JP Morgan anticipates a 35% chance of happening by the end of the year. But I think we have also yet other indicator to consider as well, as you also rightfully put together, Japan, but also the fact that the VIX, which essentially measures the options traded on the S&P 500, came back down from 65 to 26, which is pretty much close to the average that we've seen towards the beginning of the year until now. So essentially, we're seeing a market rebound and recovery from what you're seeing now, right?
Exactly. Right on. It's still a developing story, obviously, but we're headed towards good light. In the next slide, we will talk about the potential scenarios. Just like we
I love that
said.
chart, by the way. I really love that table. It's a great table explaining the bull, neutral, and bear case scenarios. On the top side, you could see in green the bull, and in the middle neutral, and then the bear case. But at the bottom, you could see the performance that we could be expecting depending on some of these events and metrics that could be shown to markets. Please, Dina, go ahead.
Thank you. No, absolutely. Yeah. So the best case scenario here, we are next Wednesday, we are expecting the CPI data, which is the key inflation data for the US. So with the ISM and the jobless claims that we've just talked about, things are looking a little bit optimistic. Maybe inflation will be cooler than expected. If it is, then it is very bullish for our asset class. Also in September. So the market has priced in, or they're predicting that a rate cut is happening in September. However, there is some disagreement to how much will the Fed cut. So just a few days ago, it was 89, 90% 50 basis points cut. However, now I just checked and it's almost a tie, 56.5% probability that it will be 50 and 43.5% it will be 25. So we think it will be very bullish if it's a 50 bips cut, and it will be a little bit neutral, but underwhelming if it's 25. One thing that would definitely overshadow it or make markets more excited is the U.S. presidential race. On September 10th, if I remember correctly, we are scheduled to have a presidential debate between Donald Trump, who has been making strides and a lot of progress with his promises to have a crypto-friendly presidency, also picking J.D. Vance, who is a big crypto proponent. But he will be debating Kamala Harris, who is still yet to disclose anything about her views on crypto. However, she's been in talks with many legislatures and many Democratic policymakers to just make up her mind and how to steer away from the infamous adversary position that Joe Biden has taken so far. So we will see how that happens, and this is for me the most exciting. And the news just came out a few days ago, so we might hear some good news about Kamala Harris, and that's when the debate will be most exciting. The bear case scenario, or the worst case scenario, is if the tension in the Middle East, we still don't know how things will look. And of course, like any Middle Eastern war or conflict, people tend to exaggerate. But we know that in last April, Iran was also threatening to, and they actually launched an attack, but it was limited. So we don't know what will happen. And Iran has been saying that they don't want to put the world in war and stuff like that. So we will see what happens. But it will be a little bit bearish for our asset class, only on the short run. I think in the long run, it is actually very bullish. It should turn very bullish because people will realize that their currencies are getting devalued, just like what happened in Egypt and Turkey over the past few years. And they'll want to invest in something like gold and like Bitcoin. But we will see how that will materialize. And in theory, of course, that makes sense. But in practice, we will see. Also, if the inflation in the US takes a downturn unexpectedly, it will also mean that there will be a liquidity crunch, or there will be like a restriction, or the appetite in risk on assets will really decline, especially if the indicators point towards a global recession. And yeah, but it is important to note, like I duly note here, that past performance are not indicative of future results. However, they could serve well as a reference point.
Thanks,
Yeah.
Lina. I think this is great. This is a good overview on some of the expectations at the macro level. Now let's dive into more within the crypto asset industry, especially because the audience and the investors here are interested in this asset class to learn more about what we can learn from the past historical drawdowns and drawbacks that we experienced before. So I would pass on the mic to Max to walk us through some of the comebacks and expectations that we are looking into, especially for the past few days. We've seen some of the key indicators based on investors' behaviors that may indicate that Bitcoin may well as be undervalued relatively for the past 2 years. So tell us more about the Bitcoin Fear and Greed Index, which has been one of the key indicators amongst others, of course, that we look into, Max.
Yeah, no, for sure. The reason I think this indicator is quite important is because it allows people to zoom out, which I think is very crucial in moments of a market down. So for those investors who aren't familiar with the Fear and Greed Index, it's very similar to how it's calculated in the traditional equities sector, but it essentially measures if an asset is relatively under or overvalued and the kind of market sentiment around that asset. So Bitcoin at the moment is in a level of extreme fear. And I don't tell you guys that to incite fear into you guys, but rather the opposite, and to take a moment to zoom out and look at the bigger picture. So first things first, Bitcoin is trading at around 57K. And to be in an extreme fear level when you're trading at 57K is a testament to just how far the asset has come in recent months and in the last few years as well. Around the last time when Bitcoin was at this price level was in January, February, as you can see there, trading at 57K and in a level of extreme greed. So to go from in a couple of months to being at 57K and being in extreme greed in early January, February, to now moving to currently where we are, which is 57K and in extreme fear, shows just how far we've come in just a couple of months. On top of that, the last time we were actually in an extreme greed region was towards the end of 2022, which was following the FTX crash, and Bitcoin at that time was trading at 16K. So this kind of shows just how far we've come. And in that previous time we were at extreme fear, it was followed by a kind of historical price rally. So hopefully this can happen this time as well. Obviously, as Lina just mentioned, past performance is not indicative of future results, but it can be a nice indicator for people to take a step back and just realize that while we're in fear levels, we've come a really long way.
And I think it's a great overview of this indicator that looks into investors' behaviors thanks to the transparency of the Bitcoin blockchain. The closest indicator that we can use today in traditional finance is the VIX for looking at the S&P 500 and the volatility of the options market. And it's quite similar to that as well, applied to crypto. So for the investors looking at the Bitcoin Fear and Greed Index, think about the VIX of crypto, but reverse, which indicates when essentially the market is quite fearful given the selling pressure. That may indicate an undervaluation or capitulation by short-term investors more specifically. So that's a great indicator to look into. If you have any questions, feel free to post your questions in the Q&A button. Okay, up next, what has been the behavior, especially of the longer-term investors? Because now we talked about the selling pressure and how these translated into the VIX indicator in crypto, so the fear and greed index. But tell us more about what has been the behavior of the buy and hold investors, just looking at the transparency of the Bitcoin blockchain, Max?
So where I left off on Monday was telling you guys that it was mostly short-term holders that sold on given the market downturn. And that's likely due to the kind of number of new entrants we have in the market, the growing accessibility of crypto. But when you look at the long-term holders, which are those who have held Bitcoin for more than 12 months, they actually increased their holdings since Monday and currently hold 13.71 million Bitcoin. So that kind of shows that they took the opportunity, firstly, to buy the dip. But on a second side, it shows the kind of long-term conviction that these holders have in the asset class, which does paint a positive picture going forward.
Absolutely. And this is a great indicator. Usually behind the scenes, how that works is we're looking at several addresses. Think about the account number on the Bitcoin blockchain, and we're looking at whether they're moving towards buying on exchange, especially for the wallet addresses identified by multiple analysts like Max to understand whether wallet B, for example, is an exchange. So if you have wallet A of an investor and wallet B of an exchange, and there is a movement there, an increase in the number of Bitcoins within the wallet A of the investor, it shows again that there is a buying pressure or a buy and hold strategy by a specific wallet from an investor. Okay, moving on to Ethereum. What happened with Ethereum and what other things that we should be looking into, especially as we're able to identify wallet exchanges? Think about the Coinbase of the world, the Binance of the world. What can we learn from that, Max?
Yeah, of course. So given that Ethereum was a big sufferant on Monday, thought it would be quite timely to give you reasons to be optimistic for ETH as well. So I think the main thing that we took a look at here was the exchange inflow volume. So that kind of shows the number of the total flow going into exchanges, which is obviously where individuals or entities move from crypto to fiat and vice versa. So an increase in exchange inflow would show that people are looking to sell off their assets. And as you can see on this chart on the top right-hand side, this kind of movement peaked on a year-to-date basis on Monday, reaching around 887,000 ETH, which is approximately 2 billion based on Monday's market price, but which shows that huge selling pressure which we saw on Monday. But positively, what we've been seeing in the last few days is that this amount has already come down by 55%, which is a huge downturn and shows that the selling pressure was relatively short-lived, and it's now coming back to the regular levels that we have seen throughout 2024. So this is another reason to just stay positive.
Absolutely. I think to summarize here, we've seen a market recovery clearly on the Bitcoin network as well as on the Ethereum network. There is a drawdown of 55% of the selling pressure coming onto crypto exchanges. So this is a very healthy level that we see now of the Ether on Bitcoin or Ethereum exchanges. And this is quite exciting. What are the other reasons for you, Max, to remain positive looking at the blockchain data? And we're really proud to actually show here one of our charts directly sourced from the Ethereum blockchain that shows you the deposits and the withdrawals on the Ethereum network itself. As you guys know, Ethereum is as a security mechanism for putting in capital to secure the network instead of using supercomputers. So as such, we can look into the stake or the capital of the Ethereum network to understand the investors' behaviors and assess whether the Ethereum blockchain had a structural issue or not. And clearly, what we can see here is that we had absolutely no blockchain structural issues and that the network was working as intended, which is very important to understand also what has been the behavior of the security administrators of the Ethereum blockchain.
Yeah, no, for sure. As Ellie rightfully mentioned, it can give us an insight into the kind of structural, like the security on a structural side of Ethereum, but it can also give us a little bit of an insight, the sentiment of these stakers. Holding ETH is one thing, but then staking ETH, as Ellie correctly mentioned, is a whole nother level of kind of commitment. It requires you to actually lock up the assets for a given period of time. And so the fact that throughout this week, we haven't seen massive exodus from staking activities is a really positive thing. We actually saw net positive deposits. since Monday of 37K ETH. On top of that, the validator queue is also not being exited with positive entries throughout the week. Naturally, if you look at the graph, you can see that activity was largely subdued throughout the week due to this kind of downturn that we saw, and there might have been some fear and some uncertainty. But the fact that, as Ellie mentioned, we didn't see a structural issue with Ethereum staking and we didn't see massive jumps in the exit queues is a really positive thing. And the last kind of benefit here, or little point I'd like to leave you with, is that Ethereum staked ETH is actually at 34 million ETH, which is an all-time high, meaning that Ethereum is secure as ever.
Exactly. And also, I think to give some perspective to the investors here, because most of us are not looking at Ether as a medium of exchange, or at least as a unit of account. So 37 Ether represents over $90 million in Ether invested on the Ethereum blockchain to secure it. So this is quite unprecedented amidst such a market correction. Okay, moving on to the historical drawdowns. Max, within a minute or two, can you tell us very quickly what are the lessons that we learned from the COVID-19 market crash, Luna and Terra, as well as FTX?
For sure. I'll keep it short and sweet. It would be easy to say Bitcoin has survived drawdowns before, so it'll survive them again. And I don't want that to be the message that's taken away. But it has actually survived bigger drawdowns. In COVID-19 was a very macro-driven drawdown. And around June, end of June, beginning of June, with the Luna and Three Arrows capital collapse, it was also a bigger downturn. The positive thing being here is that it did recover, and to reach the same valuation, it took Bitcoin approximately 47 days post-COVID-19 crash. And admittedly, it took around 9 months following the kind of Three Arrows and capital collapse. To add a little bit of context here, Bitcoin was on its way back up in 2022 following that collapse, but obviously the FTX scandal came in around November 2022, which kind of halted the progress it was making. As Ellie alluded to on Monday, Bitcoin drawdowns of more than 10%, they're statistically relevant and happening every quarter. And so while you might not be able to anticipate such an event in terms of timing, it is something that investors can expect within the asset.
Absolutely. And also the research team has a fantastic report on portfolio allocation strategies, as well as valuation frameworks, understanding the rebalancing strategies to rebalance portfolios between equities, bonds to crypto, and vice versa on a quarterly basis or annual basis. We have a fantastic, thorough research on that as well. Moving on to Ethereum, within a few seconds, Max, what are the lessons that we can learn from the past drawdown?
The story is again similar for Ethereum, so has survived previous drawdowns. Of course, Monday was particularly bad. It was the biggest daily drawdown in 3 years. But one kind of interesting point that I started noticing when looking at the past drawdowns that we've seen is that it takes longer for crypto assets to recover from a crypto-specific event, likely because the kind of fundamentals of the asset class might be questioned. But given that this downturn was largely driven by macro-specific events, which don't take away from the asset class's fundamentals, we could potentially anticipate a quicker recovery, which we have already started seeing, than it did for the kind of crypto-specific events.
Absolutely. Tom, tell us more about the fundamentals. What have we seen so far, looking at the historical patterns from the past 4 days? So quite not a long time frame, but I think it's still good to show the investors and give perspective on how the market recovered more broadly from Bitcoin, Ether, Solana, XR, and Ton.
Absolutely. And it is really coinciding of what we shared on Monday's analyst call. As we mentioned, and Max also reminded every one of us here as well, this is more of a macro-driven event. And as we also shared on Monday, crypto still has a really strong fundamental. And as a result, we have seen that crypto market has bounced back 2.8% thanks to that. And in the meantime, crypto market is also full of opportunities. And one of the audience is also asking, what are the opportunities are out there aside from Bitcoin and Ethereum? And Bitcoin and Ethereum definitely being the largest crypto asset in the crypto market, right? their volatility might not be as high compared to other crypto assets. So when we look further down the line, we have seen Solana, Ripple, and even Telegram Coin, they have rebounded tremendously. So compared to the Monday low, you can see that Solana is the top performer. They have rebounded 42% since Monday low. And you can also see that the Solana versus Ethereum ratio is at all-time high as well. Solana currently is at 24% of Ethereum's market cap right now. And we also highlighted that on Monday's analyst call, saying that if you guys remember, Solana recently have surpassed Ethereum in terms of the on-chain decentralized exchange trading volume, which is very significant, which is indicating Solana is actually getting more and more traction and adoption in the long run. And lastly, what we need to pay attention here is the ETH selling pressure. As Lena also mentioned previously, jump trading has been one of the key contributing factor to the ETH selling pressure from the last few days. Right now, they still have around 50 million in terms of assets in ETH. They're pending in their wallet, potentially could be selling in the future. What we are also seeing is 40 million worth of Ethereum recently moved out from previously a hacker's wallet. So that can potentially contribute to some selling pressure as well.
This is great, Tom. So right now, to summarize, most of the market recovered. The average is well over 20% from the last Monday. And
right.
Solana is the outlier, as well as Ripple. What happened to Ripple? Why Ripple recovered quite quickly?
There's a lot of market events that happened these few days as well, Ripple being one of them. They recently, this morning as well, they have settled over 125 million, a lawsuit with the SEC. And therefore, the price has pumped tremendously as of today. And Solana, of course, they also have a potential listing in the Brazilian regulator for a spot Solana ETF as well. And therefore, the price also benefit as well.
Absolutely. So increase access for Solana via regulated vehicle like ETFs. And of course, for Ripple, it has been a legal action as a tailwind on their way to move the price up. So right now, what I'm seeing on the last column is the increase needed to reach the previous valuation prior to Monday market crash. So Bitcoin is about 14%, Ethereum 28%, Solana 7%. Ripple already crossed the valuation from previously, and then Ton is 8%. So Tom, if you had to give a timeline, an average, or you can give a range for the recovery fully from the last correction, what would be your expectation?
My expectation, what we are seeing using historical data as well, what we're expecting is around 6 to 12 months, because right now what we are still seeing is there are potential macro uncertainties in the market, be it US election, inflation, or like geopolitical tension that we mentioned previously. Those can contribute to short-term price fluctuations. And therefore, we believe in order to reach to previous valuation, it could take around 6 to 12 months, but it can be much faster if there is more catalyst in the short run.
I think I would love to hear from our brilliant mind in the capital market desks. I think we see for the first time that we have our very own Alessandro Mondio from the capital markets team. He's our very own capital markets specialist based out of Zurich. So welcome, Alessandro, for the first time in our analyst call. Alessandro, I would love, before going to your part, getting your take, especially from the flows that you see across all these exchange-traded funds and products in the US, in EMEA, in Australia. What is your take for the recovery of this asset class based on some of these key indicators that, quite frankly, look almost like on a second basis?
Thank you, Eli. Basically, similarly to what also Max presented, even though the prices were going down at the beginning of the week, investors actually took the opportunity to buy the dip. In Europe, for instance, we saw net inflows on both Bitcoin and Ethereum ETPs. In the US, we saw net inflows on the Ethereum ETFs, while Bitcoin ETFs recorded some minor outflows. But overall, the sentiment seems pretty positive. And on the next slide, I brought some stats where you can also see how the market really matured and grew during the last year. And so here, as I say, the interest was pretty high. So the trading activity surged significantly. As you can see here from this chart, the Bitcoin ETPs, the turnover was between 4 to 6 times higher compared to the 20 days average. This both on 6 Swiss exchange and on Deutsche Börse, etc. There are the two main exchanges in Europe in terms of turnover for the crypto ETPs. Spread on Monday widened significantly across all the ETPs. However, by 11 a.m., so pretty soon in the morning, the spread already started to tighten, at least on the main coins such as Bitcoin and Ethereum, although they remained above the 20 days average at the end of the day. But this is also something that we didn't see during similar market events. And as I was saying, signals a more mature market. And also something that really strengthened the case for crypto ETPs, and it's very important to highlight, is that despite all this turmoil and the heightened volatility, the uptime for the ETPs was pretty impressive. The uptime is basically the presence of the market maker in the order book. So how much time an investor could buy or sell the ETPs on the exchange. And during Monday, it reached across the whole range or average at 99%. So this means that investor could buy or sell the ETPs for 99% of the time during the trading hours.
This is really impressive. And it shows, again, an easy and safe access to crypto via ETFs and ETPs, despite the fact that we've seen heightened spreads at the beginning, 4 to 6 times higher. What we've seen here is that actually the market recovered quite quickly, especially given the fact that investors 99% of the time were able to get in the market at a reasonable price and at tight spreads as well, which is really impressive in a market turbulence like the one that we experienced on Monday. What happened to Ethereum as well? Because I think more broadly, crypto, especially Bitcoin, represents over 50% of the entire asset class. But what about Ethereum ETPs, Alessandro?
So on Ethereum, we saw a similar behavior to what we saw on Bitcoin ETPs. The turnover was higher, between 2 to 3 times higher than the 20 days average. So slightly lower compared to the Bitcoin ETPs, but still quite high. And also the spread here widened significantly, as you can see from the chart on the right. But I think that to really understand why the ETPs behave this way, we also need to look at the underlying crypto asset market and examine a bit the factor that affected the liquidity and the volatility.
Absolutely. And what we're looking at on these charts are the Swiss market on the left side with SIX and the German market with Deutsche Börse for the audience to know. Moving on to the next slide, we're looking at the underlying Bitcoin markets across OTC desk and crypto exchanges. On the left side, you got the 2% order book for Bitcoin and the US dollar. And then on the right side, Bitcoin and Ether realized volatility. Alessandro, you mentioned that the market has become more mature and liquid, especially compared to the market crash in 2020, as well as others that we experienced before, given the fact that we have more market makers coming into the asset class, given the fact that we have, of course, exchange-traded products. 99% of the time, investors are able to come into the market, which is quite impressive. So tell us more about the other side of the iceberg, which is the underlying Bitcoin markets.
So for the underlying Bitcoin market that also represent the main layer of liquidity for the crypto ETP, we saw that the liquidity, as you can see from the chart on the left, that is the 2% order book, that the liquidity shrunk to 1/3 of what was before. This reduction in the liquidity can also bring and lead to increased volatility, as the order book is also unable to absorb large orders or a significant level of orders. So the drop in liquidity in the chart, you can see from the narrower green bands compared to for instance, the days before. As you can see on August 5th, it's narrower. And also additionally here, looking at the Bitcoin volatility smile. So here we can see the implied volatility. We can see how on the 5th of August, what was the situation. So the near-term expiries had higher implied volatility when compared to further out expiries, which indicates technically a backwardation market and an increased short-term uncertainty. But here, this also leads us to the next level, to the next slide, that is, what can we expect next? And So here, from this slide, and to answer this question, we need to analyze how basically the liquidity changed from the 7th of August onwards. And as you can see from the chart, the liquidity, the one on the right, the decrease in liquidity contributed to a spike in volatility, but also went back to previous levels quite fast. Also, from the chart on the left, you can see how the realized volatility peaked between the 5th and the 6th of August, and then already on the 6th started to go down, coming back to levels that were more or less twice what we had during the weekend, but still went back quite quickly. And also, what is important here to highlight that the events that drove this effect in the market were more, as we already said, akin to the COVID-19 pandemic, rather than something strictly related to crypto. And therefore, for instance, looking at the volatility, when the COVID-19 hit in 2020, the volatility on Bitcoin had a big spike up to 240%, while on Monday, the spike was only 80%. That is more or less similar to what we have seen when there was the launch of the Bitcoin spot ETF in the US.
I really love the last comment that you made, Alessandro. And the reason why I love this comment is because what you just mentioned is indicative of the maturity of the asset class. So on the other hand, in the macro environment in 2020, we've seen the VIX compared to Monday at the same level. But when we look at the volatility spikes, it was much higher in 2020, but by orders of magnitude lower on Monday, and a lot more of liquidity and participation from market makers and APs across investment vehicles. And that's a testament to A, the adoption and the maturity of the asset class, but also B, the interest that we see across the investment community to have an easy access to crypto, or more broadly, Ethereum, Bitcoin, and other underlying assets. So this is really fantastic. Now we are almost at time for the Q&A session, and I see multiple questions from the audience. That's quite exciting. So the first one is, can you give your thoughts as to why Ethereum is underperforming Bitcoin and Solana, and what could be the trigger to flip the gap? I can take the first bit of that question. And what we've seen, especially on the ETF side, is that the flows on Ethereum were actually positive on the day after the crash compared to the flows that we've seen on Bitcoin. But again, these ETFs are not representative of more than 10, 20%, or 30% of the entire crypto markets. But what I would say here is that there are several catalysts that we see on Bitcoin and Solana and Ethereum that are very different from one another. And the fact that Ethereum today has just launched in the US, and there is now a multiple number of people that can actually add Ethereum onto their alternative suites within their portfolios via their RIAs or financial advisors, or directly by themselves via their investment platforms, is a testament to be reckoned with. And in the UK as well, we've seen the allowance of the professional segments to also have access to Ethereum and Bitcoin. So there is an expanding asset class. But what we've seen on Ethereum structurally is that there were a lot more selling pressure directly from one of the key market makers called Jump Crypto, as Lina mentioned, which essentially sold nearly $500 million in Ether. So there has been a lot more selling pressure from one of these market makers. We've heard also rumors about Jump Crypto, but they are yet to be confirmed. But all these elements are to be considered. But what I would say is that crypto is maturing, and this is a great thing for this asset class to be in the hands in a safe way across the world. Thank you for such a great question. We have another question, which is, what do you say to the investors who see Bitcoin as a risk asset and are fearful that the price of Bitcoin will fall should geopolitics risk increase again? Think about the recession fear, the U.S. election uncertainty, or the Middle East. Tom, what would you say to the investors that may be fearful today in this market environment and probably uncertain situation?
So the uncertainty at the end of the day, we don't have a crystal ball. We can't predict whether the geopolitical conflicts will happen or not. But what we can do is looking into the longer term on the investment thesis and investment cycle as well. when we look back into 2020, usually when you invest in 2020 is usually have a much higher return if you invest in a longer term basis. So what we can do or what investors can do here is dollar cost average. It's not financial advice, but what usually investors will do is dollar cost average, so that none of us has a crystal ball, right? But none of us can time the bottom. But what we can do is average out and to diversify our risk out in a longer time frame as well.
I think it's also very similar to some of the crashes that we experienced in the past, and not just in crypto, but through the great financial crisis or the dot-com bubble. At the end of the tunnel, there is a light, and we're going to see protocols, assets, and companies coming out stronger than ever, right? Amidst the dot-com bubble, Amazon dropped by over 80% within a year compared to the last year performance at that time in 2001. But the fundamentals, looking at the customer satisfaction score, looking at the adoption of the web store at that time, was significant. What investors should look into, especially if they are fundamental-based investors, buy and hold and long-term, is understanding that the fundamentals are improving and haven't changed. There will be short-term fluctuations, but at the end of the day, if they understand clearly the fundamentals of a neutral, decentralized network that gives an easy access to an asset that is an emerging store of value like Bitcoin, and that resonates to them, then it makes sense to think about an investment opportunity. But of course, education is key, and we have a fantastic research and key salespeople and product people in our company at 21 Shares to guide the investors through their journey and to better understand the fundamentals, the first principles of this asset class. So education is key. What I would say is really getting educated, jumping in on these calls or listening to the recording, jumping on a one-on-one with our amazing research team or salespeople so that we can guide you through. The other question is, many in the crypto industry in the US are hoping for a Republican democracy or the Republican presidency, given the apparent growing support from Donald Trump. And what would a Harris presidency mean? So it's very hard to tell for us. We are looking at how the US presidential race is going to evolve. For us, we are willing to see, especially as Lina mentioned, how the debate would unfold and what would be the probabilities, looking at the polls or even looking at poly markets. For those who don't know, poly market, it's a prediction market of multiple events, including the US presidential race. So there are multiple factors to consider here, but clearly it's really hard to tell what would be the other side, from the left side to the right side, what would be the left side in the US, but we're going to keep a close eye on that. But either way, crypto is here to stay, and clearly crypto should be a bipartisan technology and protocol to navigate through the hands of several peoples in the US. That's what I would say here, but there are several risks, I think, to consider here that are not priced in, of course, but we're going to keep a close eye on that. But what I would say is that if you're interested to learn about some of these prediction markets built on the Ethereum blockchain, like Poly Market, POLY, and market, this is also a place to look into with other factors and websites as well. What other opportunities do you see in the space outside of Bitcoin and Ether? Max, what do you see? And also Alessandro, from the flows perspective, year to date, what other things that the investors are interested in? Maybe Alessandro, you start first from the flows perspective on the ETF side, which is like the smart money index. What have we seen so far this year in terms of flows?
In terms of flows this year, except Bitcoin and Ether, that of course they are big leading. We are seeing much interest from investors on smaller alternative coins, such as Solana, a few on Toncoin, and also some smaller coin, newer, such as, let's say, Injective or this kind of coins.
Makes sense. Makes a lot of sense. What about you, Max? What do you have in mind?
Yeah, so I think the kind of two that I've been thinking about as the next step for investors looking beyond Bitcoin and Ethereum would be starting with Solana, which Tom already touched upon. It's becoming, firstly, more and more important, and it's making its kind of product market fit more and more relevant as a kind of retail Ethereum, a retail smart contract platform. Of course, we know that Ethereum kind of suffers from these high gas fees, and that's something that Solana has managed to essentially abstract away. So in that front, I think is a very good and interesting project for investors to take a look at, especially with the Brazilian potential launch of the Brazilian ETF there. And then, as Alessandro touched upon on Toncoin, I think it's a very interesting project because they're really trying to abstract away some of these blockchain difficulties and technicalities from the end user, which I think is in the end very crucial to garner the next wave of adoption beyond the enthusiasts. Users and individuals, the next wave of entrants will want something that is fairly similar to using Web 2 applications. And that's something that I think Toncoin is doing a great job at.
Perfect. Sounds good. Not financial advice, of course, for the audience, but impartial education only. So another question is, can you share some thoughts on the importance of the Ethereum and BTC pair as an indicator, which may be an indicator for general altcoin recovery? Potentially, I would say, but on the flip side, what I would say is that on the smart contracts vertical and category, we're seeing a lot more competition. As Tom mentioned, we're seeing the rise of Solana, we're seeing the rise of Base, a blockchain built by Coinbase, a leading company in crypto and a leading crypto exchange. So there is a lot more competition here. So there is other altcoin recovery to consider, such as the Bitcoin dominance, which is at an all-time high today. I think it's 53%. There is also the Solana and Ethereum pair to consider. And then more broadly, what I would say is, if you're interested to learn more about the broader asset class, is looking at our classification standard called the Global Classification System, or GCCS, that allows you to have a broader outlook on the asset class and the different sectors and themes that investors, especially within crypto, are interested in, such as gaming and infrastructure and more as well. What is your take on crypto mining stocks? I think that would be a question to Tom. Do you have any take on that, on the crypto mining landscape?
I don't have strong opinion here, but crypto mining historically, it is one of the early indicators in the traditional finance market before the ETF is launched. A lot of people has been accessing crypto exposure via these crypto mining companies. So it has always been a good indicator to grasp traditional finance interest towards the crypto asset class. And I still believe it will remain that for a while because the ETF vehicle is still not widely adopted by many traditional finance companies yet. It is still mainly retail driven, but I believe it will change in the long run as well.
Thank you, Tom. Another question from the audience, very engaging today. We say in the past that crypto is uncorrelated in terms of market stress. It tends to correlate much more with traditional assets. Can you explain why it will be less correlated again? So I think there is correlation and then there is volatility to consider, which to some extent is connected with one another as two metrics. But when you think more broadly, when we look at the correlation on Monday, as we mentioned, it was near at par, right? So it was, I think, 49.49 compared with what we've seen with COVID-19, when essentially all the asset classes spiked in volatility and the correlation was close to 1. When we had the Luna and Terra crash, the correlation was actually close to 2.85 and 0.9. So clearly we're seeing a less correlated asset class, but also crypto, you have to remember, crypto was the only market traded over the weekend at that time. So essentially there is also an exacerbation effect from the futures market, where essentially we've seen liquidations, or especially long liquidations on Bitcoin. People that thought that Bitcoin would go to $70,000 or $80,000 before going back down to 55. We've seen a lot more positions like that on the futures market. You also have to remember that the futures market is the largest segment compared to the spot market and compared to the options market. Naturally, very similar pattern that we see also in the equity market. But you also have to remember that there is a escalation effect in crypto that does not always have to be indicative of what's going on within the broader macro environment. But the correlation was actually pretty lower than what we were expecting, especially over the last 7 days. The 7th trailing day of the correlation was actually around 0.49, lo and behold. The other question is, interested to learn more about the volatility that we've seen impacting spreads and depth. Has ETP trading been only orderly? Can you tell more about the inflows and the outflows? I think that's certainly a question to Mr. Mondio. So I leave the mic to you.
Sure. So that's an excellent question. As I said, yeah, the volatility and the contraction in the order book depth, of course, impacted also and was reflected in the spread on the ETPs. But at the same time, given also the structure, how an ETP works, as I said, there are also 3 layers of liquidity. Probably the liquidity on the ETP came back a bit earlier compared to the underlying.
That makes sense. It makes a lot of sense. Also, to remember for the audience, 99% of the time, the investors were able to come in and buy. The spreads were a little bit higher before 11 a.m. at that time on Monday, and then came back down to the average quite quickly. So we've seen a rebound, a swift rebound on Monday compared to other market distress that we experienced in the past. 2 more questions, and I understand that we are at time. So the first one, or the second to last one, is what do we expect from Ripple? Tom, because you mentioned Ripple in the past, what is your expectation moving forward?
I expect Ripple can first focus more on ecosystem development now that they have finished a very long lawsuit with the SEC. And Ripple previously has seen tremendous and really meaningful partnership with traditional finance banking. And I see that will be the key focus in the future, especially with tokenization is one of the key topics within these financial sectors nowadays. So I believe Ripple potentially could be announcing more exciting partnerships and adoption in the future as well.
Very interesting. Looking forward to seeing how the future unfolds. Last question is for Lina. Of course, ahead of sharing the question, Lina, this is no legal nor financial advice. What other alternative crypto assets are you looking up?
Wow, other than Solana and Toncoin, that's a difficult one.
No, you can mention anything that could be top 5, top 10. I think is fine. What is the one that is top of mind if someone asks you that question?
I think it has to be Helium, one of the DePIN protocols on Solana.
What is DePIN first? Because you're using acronyms. So DePIN stands for infrastructure or decentralized infrastructure. So think about your mobile operator, but built on the Ethereum blockchain instead of built on the traditional rails. We're seeing a convergence there where essentially you could have your mobile subscription built on the Ethereum blockchain, which is or the Solana blockchain specifically here for Helium, which is quite unprecedented. But tell us more about Helium within 30 seconds because we're already at time.
Yeah, I think I can more tell you about DePIN. The reason why I'm interested in Helium is the DePIN infrastructure industry. How I think of it is that it's a level up tokenization. It's like tokenizing actual real world services. That is what I'm really interested in. Just the crosshairs of the real world we live in and the digital world that blockchains promise. But yeah, I think we should be cognizant of time, and that will be it. Maybe stay tuned.
Fantastic. We already passed the hour, but I want to thank you everyone for the time and the patience. It was a fantastic session. Tom, Lina, Max, Alessandro, thank you very much. And also, Alessandro, welcome. Welcome to the first analyst call, and certainly not the last. And I wish the audience a fantastic rest of the day, whether it's the morning your time or the afternoon or the evening. But we appreciate your attention, and we're going to see you very soon.
Thank you. Bye.
Thank you very much. Bye-bye.
Thank you.
Thanks, guys.